Hey everyone, and welcome back to our usual chat about the strategies in our portfolio that have performed the best over the last period. As always, before we begin, I invite you to please go and leave us a like, subscribe to our channel, and go and click on that little notification bell so that you can stay updated on the release of all our new content. We really do appreciate it. Thank you so much. Hi, we are the Unger Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unger, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Okay, so this week I want to tell you about the S&P 500 futures, which certainly needs no introduction, I know. It is one of the most liquid financial instruments in the world and tracks the performance of the 500 stocks, the 500 highest capitalized US stocks. And today, we're going to be looking at two trend-following strategies. So let's get started with the strategy that we see below. Now, this strategy was developed in 2018. And as I mentioned earlier, it is a trend-following strategy, meaning that it follows, or at least tries to take advantage of, the trends forming in the S&P 500. So this market is well known for its mean reverting tendency, which means that it generally tends to, let's say, bounce around average levels. However, we have also seen that over the last few years, this instrument, the S&P 500, has developed a pretty pronounced trend-following characteristics, especially during dips like the ones that we saw in 2022, for example. This strategy, it takes advantage of the indications provided by the pivot points. More in detail, it goes long when the resistance 1 of the pivot points is crossed, while on the other hand, it goes short when the S1 level, also called support, is crossed downward. But a word of caution, be careful though, because in this case, the pivot points, which we see here in the chart, are calculated using the cash session of US stocks, which goes from 8:30 a.m. exchange time until 3:15 p.m. So, in other words, that's the period when the US stocks are open and can be traded in the secondary market. So let's go and edit the inputs in order to see precisely the levels that we plotted on the chart until 3:15 p.m. More in detail, this strategy will wait for as I mentioned earlier, it will do a check at 10:30 a.m., so 2 hours after the cash session opens. That's to see if the price is above the resistance 1 level of the pivot points. Resistance 1 here is represented by the light blue line, and indeed you can see that the price in this case was above that level. Let's go and have a look at the short trade. Of course, there are less short trades than long trades here. So it's a bit more difficult to find them because shorting a market like the S&P 500, well, it isn't always profitable. Okay, in this case, we see that the short trades, again around 10:30 in the morning, after the first 3 to 4 bars after the cash session opens, you can see that the strategy opens the short position when the price is below the support 1 level, which is this thin blue line. This is a system that, as I told you, was programmed in 2018. So we could say more or less around this time. And you see that even the out of sample works pretty well. I mean, I know that the mean reverting logic is one of the most profitable in this market. However, in the last few years, the trend following has also given some excellent profits. So guys, do yourselves a favor, go give it a try too. Let's move on to the next strategy. This is also a trend-following strategy, as I mentioned earlier, but in this case, we're not going to be using pivot points or other indicators. What we're going to do in this case is calculate some kind of range from the opening of the day and go long when prices break that range upwards and go short when the prices break that range downwards. Now, how is this range calculated? Well, the range is calculated as a multiplier of the average true range. So when the market reaches prices that are at least 8 times the ATR at the beginning of the day away from the open, we'll enter long. And on the other hand, If prices fall to a level at least 8 times the ATR at the beginning of the day, away from the opening, yeah, you guessed it, we'll go short. So an absolute trend following strategy that waits for a very powerful downward extension, here for example, and then enters. So the strategy waits for the market to make a very clear and, let's say, decisive movement before taking a position and try to exploit the trend. This kind of system, it can be very useful because it can really help balance our portfolio in the down phases of the market. Because as you know, when the market goes down, and generally when a stock index goes down, it triggers a sort of panic selling mechanism among traders and investors that tends to reinforce the bearish movement. Like, well, here in this case, for example. On the other hand, the long side is struggling a lot more. I mean, there's no shortage of positive trades here. But as you can see, the long side is struggling more because it usually works better at rebounds. Now, this strategy has been out of sample for many years. We see only the last 300 days uploaded here. But I decided to show you this picture because, well, it represents very well how the strategy behaves in down phases. You can see that the buy and hold has been definitely bearish over the last 6 months, or even 8 months. Well, since the beginning of 2022 at least. And the volatility, yeah, that's increased a lot. You can see that the movements are larger and more significant than, for example, 2021. And as you see that the strategy, just in conjunction with this increase in volatility, manages to exploit the cues provided by the logic of the system. So guys, go and try it out too. These are beneficial strategies, especially in times of downturn and high volatility, and they can be coded without any particular difficulties. Now, if anyone among you is interested in the world of systematic trading, I recommend that you click on the link in the description. From there, you can watch a free presentation by Andrea Unger, or you can get our best-selling book, The Unger Method, by paying only the shipping costs, or even book a free call with a member of our team. And if you liked the video, please be sure to leave us a like, subscribe to our channel, and click on the notification bell so that you can stay updated on the release of all our new content. And with that, we thank you so much, and we'll see you soon. Bye-bye.